Ajay Srivastava is ready on the other side, and when you say flat start, little bit of green, Ajay is like saying, thank God there is green. I'd forgotten the color of green, and I can see that he's already writing down the stocks which you want to focus on. Hello, sir. Good morning. We can see you. Can you hear me? Oops. I thought he could hear me. Never mind. Maybe he's too busy trying to understand and capture the market volatility. It's been such a nightmarish kind of a market that if you try and capture the market from the lens of an average investor, the real test of the bull market is that when the market will test your conviction. Rakesh Junjwala once said something very nice. He said, you can borrow my ideas, but can you borrow my conviction? And that's what makes a good investor different from a great investor. Meanwhile, there is definitely a follow buying which is happening. But remember, the fall in the market has been so excruciating and so painful that markets would, in a sense, would take their time before they settle. All right, Ajay Srivastava, all of us thought that there is a color called green in the market in last 10 days, but good to see that markets are bouncing back. Do you think the storm has come and gone, or this is just the beginning of a painful, ugly, terrible patch?
Well, I think, Nikunj, to be honest, you can keep predicting these things, but the point remains that even if the global scenario stabilizes, and that's when I say stabilizes means I think the world is not going to come to an end, okay? But Federal Reserve gets out of its way and puts one or two increases on the map, and then we all go back to the races. India stocks, I think, still have a problem in terms of valuation compared to the performance that we have seen in this quarter. They've been hurt very badly for demand compression. They've been hurt very badly for commodity. So I think for Indian markets, commodity prices are going to determine the way forward, at least in the next 6 to 9 months. If we have the fact that all the commodities come down, oil comes down, I think we have a good runway out there. But if it's not going to happen and we see commodities firming up as more, then I think we got a problem on our hands. So I think it's more than international. I think international will settle down. I think we need to worry about domestic plays at this point of time and compared to the valuations and see where my stock holding lies in context of the market. Number two is, I think the opening of stocks should do well. People are going to get out and do things. And if COVID goes down the way it is, I think those stocks will have a kind of a re-rating, if not a major upside to that extent. But I think the challenge is, will there be demand come back to the economy because we are past our peak season?
Ajay, the market mantra, let's say for 2021 was buy high, sell higher. Then November, December, Jan, the template was buy the decline. Now it is sell the uptick. What is the true market?
See, it is not true. Sell the uptick is not true because it's only applied to one segment of the investor population, which is the foreign investors. Indian investors have been very, very docile, and there is a reason for that. And the reason for it's nothing to do with the strategy. The reason for that has been that when the SEBI tweaked the mutual fund commission rules, the rule became that instead of you churning the customer's portfolio and making money out of it, which means taking him in and out of the market, the present rule says every MF distributor is incentivized to keep the holding going. It's a trade. The number of days the investment is there, the number of days I get the commission. And that's the bane, because that's the why nobody pulls the plug on the market. Nobody wants to pull the plug. Nobody tells their customers to pull the plug. So I think investors at this point of time, Indian investors, have only added, Nikunj. I don't think they have sold anything in this current year at this point of time. So if you look at anybody's portfolio, start of the year, end of the year, and now, most likely you'll see he's invested more money than pull it off. It's good for the traders, good for the FIs, get in, get out, buy dips. But Indian investor, by and large, has been buying dip or high. They bought in October, for instance, at the end of the day, which is, hindsight was it's a ridiculous buy. But that's the way. When actions have consequences. When you tweak the mutual fund commission rules, this is what happens to mass of people. Poor fellows get stuck forever and ever and never get out of it. And they keep adding up more misery on themselves because some of the sector they're investing and continue are not going to perform in the next 6 to 9 months. But well, it's the nature of the beast that mutual fund industry does not tell a customer to get out.
So Ajay, we've had not a little bit of support, but a lot of support coming from DIIs, essentially SIP flows and retail flows. Now, for the first time, this bull market is testing your thesis. A 3-month return or a 2-month return or a 6-month return, even in a mid and the small cap fund, must have become negative by now. So do you think we could be in for a double whammy? FI selling and DI redemption, or you think we should not look at that scenario?
I doubt, as I said, DI selling is going to happen in a significant manner for two reasons. The damage is done. Now, when you look back in a portfolio and say, listen, guys, should I be selling? I'm already 30% below the October 26 highs or 40% lower at 26 highs, because October 26 October highs have become a kind of benchmark for most investors, at least mentally and psychologically. That, we are how much we are below that. And most of the people are now looking at it and saying, where am I vis-a-vis that? Not looking at where my fundamentals are, the P's are, or where this thing is. So I doubt, since most of the stocks are at least 20-30% below the October highs, there is comfort that I got a room to grow rather than room to go back. And I think, as I always say, risk return metrics tells us that if investors mind that if I'm down 30%, then there are greater chances of me going up 10-20% than going another 30% down. So I don't think we are seeing a major selling happening in the market at this point of time. And the more the economy goes slower and slower, the more the cash flows of industrialists and industries and people come to the stock market, because there's no reason to invest back in the businesses. Now, if you don't invest back in the business, you got to do something with the money. And the easiest thing is to come to the stock market, because everybody in the world can play the stock market. Unlike I can't do quantum computing, but everybody can come and play the market.
Let's take a look as to what's going on, Ajay, with some of those newly listed companies. If you look at Nykaa, for instance, touching the lows that it touched in January, you've got Paytm losses widening. Zomato as well has seen quite a rout of late. And as we were discussing earlier this morning, what a 180-degree change from what we've witnessed, or 360, if you will, from when the companies were the hot topic of the town. The listing saw a massive pop. The street was rewarding it. Is it just now aligning itself to reality?
Well, somebody told me a very interesting phrase that all these companies are priced to imagination. So depending on the mood of the market, you can price these companies to wherever you want to price them at that point in time, because there is no variable to price them. It doesn't matter which company we are discussing. The valuation is off the charts by a margin. I think it's not even like contemplating saying, is it 10% down? I think if you really contemplate, they're off by about 80%, maybe even 90% for some of them. Now, there is a demand supply, foreign institution money, private equity money playing this game. One guy sells to the other. The old guy brings the fresh money and increases the valuation, which SoftBank does all the time. Brings first at 100 rupees, then next at 200 rupees, the third at 300 rupees, and therefore says my valuation has gone up. So I think there is no way, if you ask me honest answer, how do I analyze this company? There is no way. Okay, the only way I can do it is how much percentage of my portfolio should be invested in these kind of companies. Eventually, these companies will make sense to investors. Eventually, I think they will make sense because they meet a need of a consumer. But they are in competitive business. Let's not be very clear. Let's say whether Nykaa or Paytm, whatever it is. And to be honest, an old foggy like me tells me that for a Paytm to say I did sales of 1100 crores and lost 800 crores, and I say even my driver can do it. Maybe he'll do better job than this guy. That you earn 1100 and lose 800, or earn 300 and lose 400. So I think we have to just take it as a small part of your portfolio and leave it for the time being, because there's no way to analyze this nonsensical valuations which are 2000 times if there is a profit at all. So I think let's live with it and understand that some of these will eventually make money. Unlike a private equity investor which invests in 5, and remember, they all sell out early. Indian investors are coming at a mature stage of these companies. That's the worst part. The big money has been made in these companies and gone. The institutions are gone. The PE funds are gone. Now the laggards will kind of compete for little crumbs on the side. And most likely, I think we'll end up losing money for a while in these stocks, because come the March quarter, you'll see the results will worsen for most of these companies. So my guess is keep them a small portfolio. If you feel excited about something, do buy it. Don't get tempted too much. But if you're trying to value it, then use your imagination to price it.
And Ajay, what's the outlook when it comes to the banking space? Because, a while ago when you were chatted with us, you were talking about how now banks are facing competition, new licenses, as well as these fintech players, and how there's...
Sorry, I lost your audio.
I hope you can hear me now, Ajay. I was talking about the banking space and how you were talking about the differentiation between the NBFC category basis the kind of rules that had been doled out by the Reserve Bank. What are you making of banks and NBFCs? I think we seem to have snapped that link. But in the meantime, I just want to take cognizance of what's going on with the markets, because no doubt, after the kind of rout we witnessed yesterday, there's some semblance of calm on the screen, if you will. The Nifty Bank as well is contributing to that. You've got a lot of those rate sensitives as well. Tech Mahindra, Wipro, Infosys, HCL Technologies. So yes, it's the IT basket that's leading the way. Not to mention names like Titan. You've got L&T, which is bouncing back at about 1821. Bharti Airtel is another stock in the green, and Bajaj Finserv, that's another candidate that's rather active. In fact, let's also check in as to what's going on with the broader universe, because there continue to remain quite a few stocks under pressure here. Rosari Biotech, for instance, Manappuram, a result reaction, Metropolis, Sterling and Wilson, and of course Cipla at 921 post that block. Hi Ajay, you're back with us. So let's discuss what the outlook is on the financial sector, because you had spoken about how now we're seeing banks face quite a bit of competition with the new licenses as well as fintech players in the space.
The banks have to directly link to the economy at the end of the day. That's the bottom line. And in a scenario where treasury income will be hard to come by, it's going to be a little trouble time for the banks, because so far as the interest rates were down, falling, you could book treasury income. Now, what do you do with your HTM portfolios? And how long can you keep building up on the consumer portfolio, which also is struggling at this point of time? I think banks will struggle for a while at this point of time. They have struggled. They will struggle in the year. And I believe that the equity markets in India particularly need to have this, base of a good banking sector performance to perform as the indices, because without banking, you can't have an indices performance at the end of the day. So, my gut says that now you will have 2 or 3 standout companies which will come out and be outliers in the banking market. And the others, the smaller banks, the medium banks, I think those need to be jettisoned as fast as possible, because they will struggle for traction, volumes, technology spends, risk talent pool. So, so if you really need to play the banks, I think we're back to the same game. There's greater money at the top of the cycle, banking sector, than at the bottom. But do we think it's going to get 25% return? I doubt very much, because nothing tells me that this sector is going to give me a performance on the background that the cost base is increasing. Let's understand, the people cost is increasing in India, just like anywhere in the world. And therefore, people like Citibank came to the conclusion that we need to sell the consumer franchise. Now, that's not true for most domestic banks. But if you're investing, my gut feel says that invest at least in the top 3 banks, you should be doing fine. Smaller banks could be buffeted. One company goes down and the loan goes down, and the NPA moves for a smaller bank at this point of time. And you've seen what's happening across RBL yesterday and what happened. So therefore, I think if you really need to play the bank, which is there is no choice not to play the banks, you need to go at the upper end of the cycle. And Bajaj Finance experiment will tell us that Bajaj Finance plus fintech does the valuation paradigm change. I think that's the beauty of the challenge for this year, to see whether adding fintech to the name, does it make a big giant become a nimble soldier? Let's see what happens there.
Ajay, good morning. It's Nantara. So just a quick
morning.
follow-up. When you say play with and stay with the top 3, you're talking about public sector banks or private sector banks? Look at the returns that one earned from SBI as opposed to, let's say, the entire HDFC group.
You know what, Nayantara, that's the beauty of you youngsters, right? You look at so immediate a future and say, have I made money in 3 months? Look at the guys who put money in all other PSU banks for the last 5 years, 10 years, 20 years. What has happened to these banks? Is there a future? SBI, I think, is a kind of an outlier for the time being. And I'm honestly saying it's an outlier, because it pales everybody into comparison as to what they're doing. They got subsidiary, they got something right. They're the government banker. So I think it's unfair to compare them with a PNB or a Bank of Baroda, because SBI traditionally has been a government's banker. They used to hold the treasury chest for the government in all the district headquarters. So they have a very big advantage in where SBI comes from, and the size, scale, and everything put together. So I think SBI perhaps, yes, an outlier, but PSU banks, you got to be kidding me. That's why I keep asking everybody, and I've asked this 100 times. Anybody asked me the question, I said, do you have an account with them, or will you open a new account with these banks? And if you're not going to open the account with these banks or deal with them, do they have a future? I guess not. They will not have a future. They are good trading bets. They go up and down. But do they have a future? I do not think they have a future at all, because the talent pool, what they are working with, is quite inferior to the private sector at this point of time. If you're taking a good quality manager takes a job, let's take I'm a corporate banker. Why would I go to a bank which has no stock option, nothing, give me a salary, puts me into the middle of nowhere as a probationary officer, while I can sit in Mumbai or Delhi with my family in an Axis Bank or HDFC Bank. Think about it. So if you can't get talent, you can't get an organization. So my guess is use for trading, but never invest in it. For God's sake, there is no future. I keep reminding you, go back to BSNL, MTNL, what they were at one time and what they are today, you'll get the answer.
Okay, so you're clearly leaning towards the private sector lenders, with the SBI being the outlier. Ajay, with what's happening in the world, commodity price inflation, all that and more, there's a lot of other news that keeps coming in, right? Whether it's crude prices or China's action when it comes to iron ore. Today, India is responding with an anti-dumping duty. I wanted to ask you, where are you as far as the metal pack goes? Because that really has the street divided.
Well, I have been votary of commodities. I still continue to hold substantial investment in commodities. I still hold substantial investment in non-ferrous at this point of time, and I recommend that as well. I have almost zero investment in ferrous because I think they're getting hit badly with the coal situation around the world, and that's not easing. Coal is at a historic highs at this point of time. Coal India is not doing any wonders here either. So I think ferrous is in a bit of a problem on the cost side, may not be on the demand side. Non-ferrous is a safer way to play and the better companies. But I am clear votary that commodity cycle is not over. And the difference in this time, and people keep saying, oh yeah, there's a difference, but I tell you what the difference is. All companies are kind of deleveraged. They're not sitting on 4 or 5 times leverage, and they're consistently paying out the debt. And even the worst of the lot, which I have a holding, so you can do, is Vedanta, which is a composite commodity producer. You can't get a better deal than Vedanta. Actually, if you ask me, it's got aluminium, it's got silver, it's got zinc, it's got oil. So if you're really playing the game of economy, that's the game to play. Now you can have a governance overhang on the company, and that's why valuation is poor or continues to be poor. But the fact remains, commodity cycle is not going to go away. And the more expensive the money becomes, the more difficult it is for anyone to do capex, to develop new mines, and do something to change the supply cycle. So yes, you will see volatility in the prices of commodities, but I think on a 3 to 5 year cycle, you are very safe in most companies because they are now totally deleveraged. And beauty, they are passing back money back to the shareholders. Remember TCS? Love the money coming back to the shareholders. Remember ITC? Can you believe it? That's 1% which doesn't move, and that's a beauty. It's a bomb. It's a stock. It doesn't give money back to the shareholders the way a Nalco would give or a Vedanta would give, and you see the difference in the stocks and thing. So I think commodity play is here to stay. You will get a lot of dividends from them the next 5 to 7 years. Prices may fluctuate, but it's a very steady place to play. And you're entering still, even today, you're entering still relatively cheaper mode compared to any one segment of the market. Change the perception about the old commodities and new, and I think it's done wonders. Not only in India, it's done wonders. Rio Tinto has done wonders there. ExxonMobil has done wonders in the overseas market. Glencore has done well there. We have our old Nalcos and the other stuff for the way. And for disclosure, we have holdings on all of the stocks. I think commodity is still a play. And if India has to do what it has to do, 8-10%, it needs basic commodities. There is nowhere to go.
Well, it's a great point. Someone sent me a text yesterday which says that the price of Philip Morris and other commodity cigarette stocks are at an all-time high. It's only in India that cigarette companies are not getting revalued. So like this, हमारा भी समय आएगा. All right, Ajay.
Nikunj, kab aayega? I don't know whether I'll be still here to see it, but if you are here, just raise a flag for me and say, this man was saying one day hamara samay aayega.
With ITC, trust me, with all due respect, the amount of comparisons and the amount of memes which are made on digital is just not funny. But that's like investors are now giving up on the stock, and those are the periods when stock goes up and everybody gives up on it. Ajay Srivastava, appreciate your time. Thank you for joining us.
Thank you very much. Have a good day.